Brenna, there's been changes in packing plant capacity for the beef industry in the U.S. What exactly has happened down there, and how significant is that?
Well, all of these closures actually started at the beginning of the year. So back in January, we had Tyson close its Lexington, Nebraska plant, as well as take its Amarillo, Texas plant down to a single shift. Then in June, we had the announcement that JBS would be closing its Solderton, Pennsylvania plant, and that was going to occur here in August. And then last week, we got the announcement that Tyson would be closing its Jocelyn, Illinois plant. And the one that's different about this is that it was effective immediately. It wasn't giving the 60 days notice that the previous announcements gave. And when you actually add all of those closures up, it really brings packing capacity much closer to the current supplies. And this really means that we're seeing a shift in leverage from the feedlot back to the packing plant.
Is it correct to assume that analysts believe packing plants have been losing money, just too much packing capacity chasing a limited beef supply?
Yeah, for 18 months, US packing plants have been operating in the red. Um, and, we've seen tight supplies that have really supported those fed cattle prices, particularly in the first half of this year.
So what will happen now with reduced packing capacity in the U.S.? Will that have an effect on prices?
Yeah, so we've already seen some of the leverage shift happen. We're definitely seeing packing plants try to realign fed cattle prices with where box beef prices are. We didn't see box beef prices reach the levels that had been expected in May and June, and that was really disappointing. And so as we move into the second half of this year, yes, there are expectations that packing plants are going to be more disciplined in terms of efficiencies with these plants, but also what they're bidding on fed cattle in order to improve margins.
So with fed cattle prices under some pressure, what will that mean for calf prices this fall in the fall calf run in your estimation?
Yeah, so fall calf run, we saw July for delivery prices still really strong, over 20% higher than last year for forward delivery prices. So we're still seeing a really strong market with feedlots competing for calves. But I think there is going to need to be an adjustment as feedlots look at what forward contract prices may be going forward into 2027 and what they're going to be willing to pay for calves this fall. We're probably looking at more of a seasonal price movement throughout the fall. And so when you look at those forward delivery prices, you see peaks sort of that end of September, early October when we would normally see them, with a decline going into November, December.
So would you expect calf prices overall to be similar, higher, or lower than last year during the fall calf run?
No, we're looking at those prices to be around 20% higher than last year.
So it's still excellent times for cow calf producers.
Absolutely. Cow-calf producers definitely retain the leverage at this point in the cattle cycle.
What else is happening in the industry as far as feeder cattle? A lot of feeder cattle moving north for feeding, or we're bringing in a lot from the U.S.?
We continue to import US feeder cattle, absolutely. And that's a competitiveness thing of the fact that we still have a premium price in Western Canada for those feeders. We definitely seen that premium narrow over the last 4 months. And that's one of, we still have pens to fill here in Western Canada. And while the cow herd on January 1st was up 2%. That's pretty modest when you think about the pen space that needs filling.
Any worries that packing plants in Canada will do anything to reduce their footprint and what they're willing to buy? We've seen these adjustments in the U.S., but in Canada, we're basically dominated by two main players, eh?
Yeah, Utilization in Western Canada and Canada in general has actually been better than the US because the US has had more of a supply crunch as they no longer have those Mexican feeder imports. And so Western Canada in general has just had better utilization rates. When we think about Cargill's Fort Morgan, Colorado plant coming back online this fall, that's actually really important because we're going to need that capacity for seasonal supplies and getting through the front end supplies that really need to move and go to the plant in order to make pen space in the feedlots for the fall run.
Brenna, thank you very much. Great talking with you.
Have a great day, Kevin.